All right, here we are with Teddy. Thank you for
Hi,
joining me
Yara. Hi,
today.
Yara. Very nice to be here. Thank you for inviting me.
Yeah, this is a little bit different of an interview because you and I have worked together. For those who don't know, Teddy is actually the mortgage broker who helped me acquire finance for some properties I purchased here in Montreal. And Teddy has a bit of a reputation here in this town for, well, being very good at what you do, being able to secure finance in situations that borrowers might not otherwise be able to. In fact, that's one of the reasons I came to you as a small business owner. I didn't really have the history and especially as a Canadian, I'd only been here for a couple of years, not a lot of tax history. So I want to talk to you a little about financing a property, but also just your life as a mortgage broker and how you got so good at what you do. And since the topic of vested capital is all aspects of growing capital and cash flow, I'd love to even know not just what you do as a mortgage broker, but what you do
Yep.
personally, Teddy, in terms of your own investments and so on. But let's start with your claim to fame, as we were joking about
Yep.
it before we hit record. What is your like? What's the big number or the claim to fame we can share about what you
Yeah.
do and what
So
you've
I've been
done?
in the business for about close to almost 15 years now. And originally, claim to fame was really if you would hit 100 million of volume in a single year, you've made it and you're doing very, very well. It was unachievable back then. And after I think my third year, I had done that. So, and now, as we had discussed, well, as you know, I own a mortgage brokerage that we have, 60 or so brokers, and I mean, there's no staff, so we do a lot more than 100 million these days. But the original claim to fame was the first level of 100 million individually there.
When you say that, you mean 100 million in loans
In
to
resident, yeah,
your clients? Is
residential
that?
funded volume to our clients over a 12-month period. Right now there's many people that can do over that, but back in late 2000s, it was different, right? The ticket sizes were less, and it wasn't as it is currently right now. Less people would use broker services and more or broker or mortgage professional services, and more would actually just walk into a branch and do their deal. And so it's really changed the outlook of the industry in the past few years there.
Yeah, okay, that's interesting. I guess maybe as we go back in time and look at your history, the whole idea of going to a mortgage broker might not have been common. So it'd be kind of interesting to see when that pops up. And obviously, today as we talk, it's very normal, but it wasn't always, right? You
Wow.
used to walk into your bank and just
Yeah,
ask for a
so when
loan,
I
right?
started, I graduated from McGill University. Well, I started working at the Bank of Montreal, BMO, back in the day, and you did your jobs, your standard opening bank accounts and standard job at the bank there, and that
Is
was
that
I
what you
started
did?
from there. Yeah, I
You a
was
teller to
a
begin with?
teller at the beginning,
Yeah. Nice.
and then throughout those years, mortgage brokering, it was called mortgage specialist and loan officer in the bank, and so I transitioned from a pure branch role to like a loan officer role, and that was really when the transition in the late 2000s was becoming where mortgage professionals had like a specific designation, and you had specialists who specialize in that type of financing. Because previously, you wanted a mortgage, you went to the bank, the rate was all the same for everybody, and they know what percentage of financing you'd get. As it progressed, really there was a lot of different types of scenarios. As you said, self-employed, Beacon scores, FICO scores. Depends on non-residents, new immigrants, a lot of different types of situations where you would need more products and more specialty to deal with them. And then it was in 2018 I actually opened my own brokerage, and so I worked in financial institutions up until 2018. And 2018 I went independent as a mortgage brokerage, a broker and a brokerage, to have access to essentially all the financial institutions in the country, and it really gives our clients more options and a lot more chance of having the best product for their needs there.
Can we go back all the way even before you were in university when you were born and raised? Were you actually a
Yeah,
local
yeah.
Montreal, born and raised? Yeah.
I was born in Montreal, raised in Montreal. I played hockey before. That was my previous whole career was completely focused on hockey. So I did move away for a little bit, and once I figured.
Oh.
It
was
was
the
it
hockey
lasted a
career?
couple of years, but that was it. And then once I realized I was not making the NHL, that I did a 360. Said I better go back to school and so I can make some money in life here. So that's what I
Okay.
did.
Well, I was going to ask actually, were there or what were your money role models growing up? Like, I guess the answer now clearly
Yeah.
hockey was plan A. In terms of other members of your family or
Yeah.
people you knew at the time, were you looking at how they were creating wealth and going, oh, I see property as an option, or I see business as an option, or trading stocks or whatever? Was that in your
Yeah,
life
for
at
sure.
that early
So
stage?
I come from a family of entrepreneurs. From my grandfather, who immigrated here from Greece. So we're Greek origin, but my father was born in Canada, in Montreal, and I was born in Montreal. But and he was an entrepreneur. My father was an entrepreneur. They had some real estate, and and basically I've started when I was really young, just understanding the business, understanding. It was different. Again, the leverage is much more important now than it was back then. And listen, I think it's taken a whole new, aspect here. But, so over the years, I did see that. I have learned that over the years. And really, that's part of probably the major reason why I did a 180 from being a hockey player and dedicating my whole life to that to, okay, I have to go back to school. I want to get an education. I want to understand, finance, economics, and so, and that's really what shifted me there.
Okay, so if your family was full of entrepreneurs, what type of businesses did they
Yeah,
have?
so
Do you
no, they
was
had
it all over the
they had
place? Or?
supermarkets. So my grandfather had started
Oh,
a supermarket chain here in Montreal, and then my father took it over, and he had sold it probably 20 years ago or so. But they were always in the supermarket business, and then they had some real estate on the side, but their main focus was really the supermarkets. And back then there wasn't the big chains, and it was really the local supermarkets that were the big thing. And honestly, from a business perspective, I did see the transition in the supermarket business from the small mom and pops to the big chain, and how scale is important, and how the economies of scale, and just really looking at things from a macro point of view versus a micro point of view is really important. And that changed the industry completely. And that's part of the reason why they had to sell, because they couldn't compete with the big stores anymore in the pricing that they had there.
okay. So you never had aspirations to get into the grocery chain
No,
business at
I
all?
didn't want to stay in the family business, and realistically, well, they had sold while I think it was in university, they had sold the stores, and so again, it was too complicated. Family business, sometimes you want to stay out of it. I went completely my own direction there, and when I graduated, I didn't know what I wanted to do, and I just started working at the bank because that was what the thing. It's a good job to work at the bank, and then you sort of learn from there.
Okay. So, yeah, I can imagine you've seen a type of business, the grocery store business, which, let's be honest, is probably not, yeah, I don't know if there's any similarities between the mortgage finance world and grocery. There must be some overlap that I don't know about, but it seems quite different when I think of my understanding of those two companies. So you didn't really grow up thinking, okay, even if the family grocery business is closing, I do want to get into retail or something like that. You were like, nope, I'm studying finance and then I'll see what happens,
Yeah,
get a job at a bank. So when you're
yeah, no,
in,
it was more the
uh,
I had no aspirations to the business, and really, I didn't know what I wanted to do when I graduated, and I just wanted to. Do I go towards investment banking? Do I go towards and doing a CFA and going towards the finance aspect? And I just bought myself some time by getting a job at the bank, and really that's where it opened a lot of opportunities for me, and really understanding the importance of financing and leverage in people's life, and that I loved it. I started enjoying it, and that's really what brought my career aspirations and how I could move forward there.
so explain then when you're actually in the bank, as an employee, obviously at the teller, you're just getting customer service experience, but eventually you get the chance to move inside and do other types of roles. What was it that appealed to you with financing in
Well,
particular?
it's pretty simple. So I was like a teller for maybe a couple months, and then I became a generalist, right? So like the financial service manager, they call it at BMO. And so you do a little bit of everything. You do investing, bank accounts, lending, basic lending. And why I liked the financing part of it is really because people needed you. I said, when investment, you put, and I understand it's much more complex than that, but you can put your money with a certain stock. You're relying on the stock, and you're basically chasing people's money all the time, and hoping that you can raise a certain amount of money for your portfolio and go like that. But on the financing end, if you were creative, if you did use your brain and understand the rules of the bank and understand to what level, because often when I was in the bank, I'm like, no, as per policy, you are allowed to approve this deal because of policy 12.2, and using that was just, I think, an advantage to me. So, and then that's really what sprung forward. I'm like, do I go towards the investing or the financing side? And I'm like, well, if people need me, they're going to request my services much more. I won't be constantly chasing money. I'll be trying to get clients, but it sort of snowballs after that, after you do a good job with one person there.
Interesting. Okay. So take us forward within the banking system. So you start getting into financing. What do you learn in financing? Is it just bigger deals as you get more trust built up? Like how do you accelerate in that?
Well, it's really doing more deals. Obviously, you're doing the amount of deals, but it's also the complexity, right? So I guess in the bank, you as you have more experience, you do more and more deals. But I did financing from commercial. We did some commercial financing when I was before mortgage specialist. I did some at BMO, but also big financing of the large towers, the 500 units, and so as you go, you see the different situations of different people, and as you specialize in it. Essentially, everybody wants to buy. Like when you have a condo building, like I would do those big condo buildings in Montreal, where you'd finance essentially everybody in the building. Well, everybody has different situations, right? And you'd have the non-residents who'd go and put a certain amount percentage down and buy it. You'd have the difficult file, so you have a good global view of everything, and at the same time, I had a whole team, and so you're able to do a lot of deals and touch a lot of different situations there.
I'm curious too, as you advance then, before you have your own mortgage brokerage, you're still in the banking system. How are you rewarded? Do you just get an increase in salary? Because there's no commissions, are there, for bank staff?
Yes, it is commission. So after 24 months when I was in the branch, I said, that's it. I want to make some money, and it's a pure commission job when you work as a mortgage specialist / loan officer in a bank, and that's where I just took off. Right, my salary went from 10 times in 1 year, and it just that's, and then I'm like, okay, now let me try to scale this, and I believe from what the infrastructure that the institution had, which was BMO, and I love BMO, great bank, and I think I scaled it to the max that I could at the time, and really I wanted to scale this much further. And banks are made a certain way. They have a certain limitation of things that you can do and how you can do things, and I understand fully why they would do that. And so essentially it was just like a normal transition to owning a brokerage after, where you have 60 mortgage professionals that you're teaching them each. Each one of them want to do $50 to $100 million of volume, and you're teaching them each how the different tactics and how to scale their own personal business there.
Okay, so before we do switch to Groupe Orbis, your mortgage broker part of the story, though, if you went from whatever it was to 10 times that amount thanks to commissions, two questions. A, how did you do that? Like, how do you just get out there and like network like crazy, or does word of mouth drive all these new people coming and asking for Teddy at your branch? And then second question, if you can answer it afterwards, I'm assuming your own net worth was increasing. At some point, you must be thinking, well, I'm also going to get into property, since that would be the logical thing to do with your own money as well.
Yes and yes for both of them. But on the first, from the first question, how I actually did it, when I was given an area. So in Montreal, I was given the La Salle Verdun area. That was the original area, which you would know. Yeah, exactly.
that's
And
right.
I had no idea about the area. You know? I visited there a few times, maybe a couple of arenas, but I went for a drive and I really strategized. Really, you're given a computer and you're saying, go get business. And there's actually not supposed to get any walk ins from the bank. So you're essentially just going out and
Oh,
getting business externally. And I'm like, okay, where do deals come from? I'm like, okay, well, realtors touch the deal at first. Okay, so let me call the realtor offices here in LaSalle. And so I did call. I called every real estate office and owners at the time, and I struck a couple deals with the different offices to actually have my own personal office in their office. And I said, okay, well, there's 150 realtors here. If I rent an office here, then I'm going to meet them. I'm going to meet everybody, and then my chance of getting a deal is much higher. And so the first, at first, it was,
does that mean you have to go from office to office throughout the day?
yeah.
Like
Well,
that's a
listen,
lot of offices.
I rented one big one at one big office, and then had smaller ones everywhere else. But I would try to manage my day accordingly, where I'd go like one day here, the next day the other one, and I would just sit there and I just talk to people, and it just snowballed from that because you would talk to somebody, a couple times, three, four, five, six times. Eventually, a deal comes. Eventually, somebody makes a mistake in the market. There's one. He goes to his own bank, or his client goes to his own bank, and they're not able to finance, or the person doesn't call back, or the person's on vacation. Okay, could be a chance, and then that's when you get that chance. You can grow it, and you do a good job, and then you can create those relationships long term. And so I just it's a numbers game, right? I'm like, okay, if I want to do, because at first it was like 50 million was like, 50 million was the top producer at BMO at the time. Oh, if I can do, I don't know, if I could do 2 deals a week, which is 100 deals a year at $350,000 a deal, I'm doing 35 million. Okay, great. So let's concentrate on getting a certain, 2-3 leads a week to fund that. And quickly it grew much faster than that. And that's where it's really did change my life because you're making a lot more money just to survive, right? And I was a young guy, so all the money I was making, it was really, I was investing it all, and that's essentially when I started just buying different properties because, for me it was just instead of keeping my bank account or instead of putting them in the stock market, I really wanted to invest into properties. Sort of like you, Yarrow, where I like them. It's interesting, and you learn over the years, what works, what doesn't work. I've made some mistakes. I've made some great buys, and especially this is a great time to own real estate with the market rate. The market's going much higher than it was even 12 months ago, and I've used that, and I've learned a lot of it. I learned also from my own personal properties that I've owned there.
Okay. Can we go back to your first property? Do you remember which
Yes,
one it was?
yes, it was a triplex in the Outremont area of Montreal. Yeah,
Oh, nice.
yeah.
Okay. And do you remember the details of the deal or what
That
year
was
that was?
2008, maybe 2007, 2008, around there.
Okay.
And I just, I bought it with my father actually, 50-50, and we put half the money each, and we gutted it and renovated it, and we sold it. We made a little bit of money, but it was just okay. I'm like, okay, we spent I think a little bit too much money on the renovations, I refinanced it. I kept it, and I learned about penalties because I actually refinanced it, and then had a 5-year fixed mortgage rate, and I wanted to sell it after a year or two, and the penalty was like 30 or 40 grand. I was like, oh, I'm not going to spend 40 grand to break this mortgage here. And then I realized, okay, maybe I have to take in consideration penalties when I'm taking financing and learning it. But it was my first one was okay. I didn't lose money, didn't make that much money. It was good to learn from it. But then I learned a few different aspects after that there.
Yeah, because that sounds like a flip
Well,
rather than
originally it was
buy
to
a
keep.
burr as
Originally it was
is
to keep,
common.
and then we're just
Okay.
I didn't want partners after that, so I just but my dad was let's just sell it
Okay.
and we'll go on from there basically. So, yeah,
Yeah, fair
yeah.
enough. No, it makes sense. I think my first property I bought with my mom too, and then I bought her out because it just gets too confusing.
Exactly. There you
Um,
go.
yeah, confusing is a nice way to put it. Yeah. So okay, interesting. Just to circle back though to the networking and getting an office in all these real estate agencies as a way to get clients. Correct me if I'm wrong, but 10xing your sales at the age you were at would not have been
No,
common, right? Probably still not even
no.
common today. So, what makes Teddy, even that Teddy, not today, but going back, that younger Teddy when he was still working at the bank, what made him different?
Well, what I did is when I first became a mortgage specialist, that's the title. I looked at the top 2-3 people around me in a BMO, and I took them out for lunch. And I wanted to understand what makes them the best. Right? One person is it networking, the other person is it, the deal knowledge. Another person is it how do you market to your realtors and so forth. So I did I analyzed a lot of people. I read every book there was on mortgages, and don't ask me the names from 2007, but I googled. I guess Amazon. I put in Amazon all the different books out there, and I actually read them. I didn't just buy books to buy books, and so I really created something that I wanted. I created a business plan. And I think what made me different than others is really sticking to it and not giving up. There's some days that are tough, but if you actually have a business plan, and your business plan is going to switch after 30 days, I have to remove some things and add in some things, but essentially I was there from 9 a.m. till 9 p.m. every day working in the office, and I was consistent about that. And if you're consistent and doing the right methods, and you're actually constantly analyzing your business and making little tweaks to it, you're able to do that. And that with the market was good at the time. I think that there was not many people were soliciting people like the way I was, not just like a used car salesman type of thing, but it was more, I was creating relationships and just constantly doing the same thing, doing the right things, always being present. For me, it made a big difference. And then it just snowballs after that, because then once you created a base, then those people tell about others, and and it just we doubled the year after that, and it just continued going from that point of view here. So, and understanding how to use a team, because back
amazing.
then nobody had assistants. Maybe some people had one assistant, but after a couple of years, I actually had had 6 assistants. I just hired, and I just created a whole team of people that were helping me and analyze my business, saying, okay, I make money if I speak to somebody. I don't make money when I'm keying in the application, when I'm asking the client for a pay stub, where's my value? When I'm giving advice, when I'm talking to realtors. And that's essentially how on my end, it's the best way of operating here.
Yeah, it's interesting. I didn't realize a mortgage broker within a big bank is almost like their own business owner. Like if it's all is commission based, you're growing your own team, which work for you. I assume you employed them.
Yeah,
the bank didn't employ them, right? So, yeah, okay.
Well, the bank employed them, but I paid
switching
them.
back. Okay. Yeah. It's almost like a franchise in some ways, right? Like you get to use the bank.
I didn't think of it as a franchise, essentially. I did have, predictions at the beginning of the year, revenues, my expenses. You have an employee, you have employees, you have 6 employees, you have offices, you have expenses, right? And then so I knew what my numbers were, what my average commission is going to be, and how much I predicted the following year, right? And I did that every year. And it just really helped me focus and understand where I want to go, and give myself goals. And and again, when you make a big check, let's say you make a $10,000 check, you don't just give up. Now, some people just make 10, 20, 30 grand. Say, let me take a month off here. so that's not what what was happening there.
Yeah. It's quite a parallel to real estate agents as well. I'm thinking of Anna, who's my agent, who introduced me to you. She tells me similar stories. It's like, how hard does she work? She hires assistants, and very similar business model. But I'd like to go back to your own investing side of this, because, all right, you did the first deal with your dad, then you sold it, then you learned from that, okay, I'm going to go solo. How did you continue to invest? Was it still plexes? Was there a reason why you were choosing those kind of properties?
In Montreal, there, as plexes are a big thing, where you have 3, 4 tenants or apartments in one building, and you buy the building. I like that strategy. what I had, I had a little bit of vacancy problem in Montreal at the time, and I said, okay, I'm not going to buy properties where I'm going to worry about getting a tenant in there. I'm going to buy properties where I'm comfortable, I understand it, and I basically went to the around McGill, and I bought a lot of the student housing buildings around there because A, I didn't want to worry about vacancy, and B, I think that they're undervalued, some of them, where the students will pay a lot of money because you're right next to the school. Doesn't matter what happens, and COVID's actually a good example. People still want to go to school. People still want to live there. It's almost like even during COVID, I don't think we had any one or two vacancies, but minimal. Like it was very, very minimal versus some of the other buildings out there. So I had a strategy of what I wanted, and whatever came on the market, I went and bought. And then you create a team, because I'm not going to start managing and the properties and going to pick up rents and if a heater's broken to go fix it up. So you create an infrastructure of a team and everything. So I had a team in mortgages. I had a team in my property management, and that's how you can scale both of them, right? And that's essentially, I think that's how any business is, right? You can't do everything yourself. You have to basically trust people and let them leverage your time like that.
Okay, so your strategy going back then with the property was really student housing, multi-unit buildings, buy and hold. You weren't planning on
buy
flipping
and
or
hold,
anything
refinance after 3-4 years, and buy another one, and then keep on scaling like that.
Okay, great. So one of my main complaints as a new person to Montreal, having come from Australia, I think you've heard me say this, is management of rental properties, where in Australia, every real estate agent has a rental management unit, and you just choose which real estate agent you want to go to, and you literally just hand your properties over to them, and they will collect the rent, do the inspections, hire any contractors. Everything is completely hands-off. They just deposit the rent minus expenses. I come to Montreal, not as common to find that kind of service. They do exist, but few and far between, and it seems like not the most thriving industry, let's put it that way. Back when you started, did you have to basically build and train a team of just people you hired, or did you hire an agency back then? Like, what did it look like for
the
management?
first few, I was doing it, and then as I grew, I did get, I don't want partners, but I did get a few people in that were owning it with me that would manage it. Okay, so you have a small, they put some money in, but you'd have a small piece, but you'd also manage the building. I give you a certain amount of money to manage the building, and so every building had a couple partners there for that who would manage it, and then today we have a team, right? We have we don't have that many units, but we have a team of 3 or 4. I have a partner that I do buy my properties with. That is essentially an entrepreneur as well in a different domain, but and then so we have our infrastructure, but it does take a little bit of time to doing that. That's really again, you almost need to buy to get to a level where you can have a full-time employee to manage the properties. You're right that there are a few rental companies here, like property management companies, but it's it's a little costly, and it's not as user friendly. It's not as popular as it. A lot of people do themselves here, and that's what it is. Some realtors do it, but it's not as it's not like that much of a business. But I think that having your own employees is much easier to control them and to
So at which point did you feel you were comfortable to hire a person as an employee for your did you feel like I have to have 10 doors or 20 doors
it's
or
almost
X
like
number of
revenue,
cash flow
right? Like
when
if
I
you're
can do that?
if you have $500,000 of gross revenue, 5% is like about $25,000 or so. So okay, I can have somebody maybe part time, or half their time is there, then half the time they're doing something, and then sort of grow from there, right? Because that's why I bought the ghetto, because the McGill ghetto, that's the location, because I would buy a building, the rents would be $3,000 a unit. So $3,000, I'd buy 4 units, it'd be $12,000, $144,000 a year of gross revenue, where it's okay, you know what, I need a couple of these and I'll be okay, right? And I didn't want to manage the units that were $600 a month or $700 a month that were just low value for me. I wanted to manage the high value, the high ticket sizes, and from again, parallel to mortgage brokering, obviously you want to have the bigger mortgages, right? Because you make more money and the same amount of effort. The same mentality from investing, where I'm like, okay, you know what? If I have a building that I have a certain amount of revenue, versus buying one little condo where it's only like $600 a month. It's a lot, the same amount of management, same amount of time, but I can afford somebody when I have large revenues versus smaller revenues there.
Okay, yeah, makes sense. In terms of like your long-term strategy with property, and maybe even today, and the whole progression, have you always had this kind of, I'm going to buy one new something a year, or is it when a deal comes to you, or are you actually looking every day? Because obviously you run a mortgage brokerage. Even before that, you were running essentially a mortgage brokerage just under BMO. That was your day job, so you can't be sitting there searching Centris, which is our version of Zillow or whatever you want to call it, for searching properties, or you had access to the MLS, right? Is that what it's called in Canada too? I think. Yep. So you can find properties, but that's not your job, so to speak. So how did you treat that? Is it a side hustle for you? What was the focus?
Again, as you create relationships, the opportunities come by you, right? And yes, I do. And my job is not just mortgage broking. Yeah, I own a mortgage brokerage, but I don't dedicate 100% of my time towards that. And I don't want to, because I want to grow. I dedicate, let's say, 80%, 85% of my time. I would still dedicate 15, 20% of my time to real estate. And I sort of split my day up like that. And I do want to, maybe a 90-10 type of thing. I do want to have a certain amount of my time, because if I'm not looking, if you're not searching for it, it's not going to happen. And I do look at Centris often, or Matrix. I do get the emails from the realtors who say, "Oh, I have a new listing on," and I'm fully aware, although maybe not 100% of my time is there, but I'm fully aware what's happened in the market. I enjoy it, so I enjoy, instead of watching a TV show or something, I'll analyze a certain area, what's happened in the market here. Do I look at it every single minute every day? No. But the good opportunities, I'll get an email for it, and I'm always looking to find a way to maximize my cash position by refinancing, and and not over leveraging, but having some money available that if there is an opportunity, then I can jump on it there.
Okay. Speaking of refinancing, question I've always wanted to ask you, Teddy. So great chance I can do this. What do you see as the appropriate time frame for refinancing? Is it something you should constantly be doing, like once every year or two, or is it purely based on market conditions? You see a better interest rate, then you do it, or even just personal conditions. You have a property situation where you have to refinance whatever for renovations. Like, what's your strategy, or even advice to clients? I guess
that's a good question. It really depends on the person and the risk tolerance. I don't like refinancing to a point where the new mortgage payment is going to be more than the revenues you're bringing in. So there's a loss on the property. You try to, manage that a little bit, and not, unless you have a really good investment somewhere else, that's going to offset that. But you try not to do that to over leverage yourself, because if there is a downturn in the market, and you essentially are breaking even, then it's okay. You can hold it an extra year or two. It doesn't make a difference if the value goes down the next day or the next month. Really, you're going to hold it for the time necessary. As long as you can cover your rents, as long as your cash flow is okay, you'll be fine on that end. We have terms, as you know, in Canada. The States is very different, and I don't know all the other countries, but I know the U.S. is very different. Here, there's penalties are a big thing. You don't want to take something that's too long term. And you don't want to you want to hedge against rising interest rates, so you want something maybe not too short term. So that comes into play, right? I don't want to refinance a property and going to pay like a $50,000 penalty, and unless it's worth it for me based on the interest rate at the time. But I try to avoid wasting money like that. You try to time it properly. From the rate is the rate, and rates change every day. But it's really, for me, it's the cash flow of the property that's important. And then if I can maximize it, and I'm not living off my property, so it's not like I need to have a certain revenue for my properties to sustain my lifestyle. My properties are for my long-term wealth, my everyday revenues from my business, my operating business. And so when I look at it like that, I'm able to take a little more risk on what I buy, where, you know what, maybe it's not cash flow positive right now, but if I improve this, that, then I'll make a lot more money in a year. So I'm able to take that sort of risk on that end versus having a return immediately on the property that I have to buy. And you can't, because if I buy a property that's undervalued right now that I think that the rents aren't there, and I fix it up in 18 months, 24 months, and I can refinance then, right? And then I can take the money back and invest it somewhere else. But if I buy a property that's maxed out, I can't refinance in 2 years. It's, well, I'm going to get 10 grand, 20 grand out of it. It's not worth it. You want to basically, depends on the property that you own there.
Okay. I have a lot of finance questions, but I want to continue back in your story, and I'll save the finance ones for as we get past that. So you spent 10 years at BMO, and I think it was 3 years ago you decided to, I say branch out, but it's almost like you just no longer work with BMO. You start your own thing, and you can work with every bank. How does it work? How do you transition? Like, do you lose all the, because I know with mortgages, there's like the commissions are trailing, so it's like an ongoing thing, not always an upfront one-time thing. So if you switch over to start your own thing, really tell me, how did you make that decision to switch over when you're working for BMO?
Actually, commissions are upfront here in Canada. The majority. There's very minimal that they're trailing, but it's mostly upfront. So you are building your revenue every year. In 2017, I had my mortgage broker's license in Canada for quite a while, in Montreal for quite a while, but I never activated it, and I was always looking for the right opportunity. And then in 2017, I had the fortunate opportunity of meeting a mentor of mine. His name is John Barges. And so John, he's the owner of CIMBIC, which is called the Coalition of Independent Mortgage Brokers Canada, and CEO. He's a legend here in Canada from the mortgage front. And we had a really good conversation, and really his vision and his long-term outlook match what my vision was. And I did always want to do more. I felt for 2-3 years I was sort of maxed out and really can do much more volume than what I was doing. But with John's vision and his coaching,
Just sorry to interrupt, Teddy. I'm just curious, why is it maxed out? Like, what is the thing that stops you when you're in a bank?
Because you have to talk to every client, and you only have a certain amount of hours in the day that you can do that. So if you're going to talk to, I think I was doing about 800 clients a year or so at the end, where I was doing 800 applications. A certain percentage of it I was funding, but you're speaking to 800 people. And that's applications. You have to speak to a lot more people to actually get it.
Okay.
Your time is limited. Because I can't.
And you can't hire brokers under you.
As a broker, as a mortgage broker, you can. And that's where I'm like, okay, well, if I take this method that worked for me and I can coach the right people with the right mindset in the right infrastructure, and that was where John came in, where his brokerage out over in Ontario and Toronto and the rest of Canada really it's a really good infrastructure that he has. I use that infrastructure. I can coach the right people. We have the best of both worlds, and I can help them scale their business, and I'm essentially scaling my business at the same time through them, and really that's how we can get it much bigger there.
Okay, so how does that's conceptually why you do it.
Practical,
practical. How do you do it? Yeah, you just go tell BMO I quit, and then you by yourself.
I had prepared it for
how does it work?
It was about 6 months preparing it. The branding, because it's all mine, right? Orbis is 100% mine, and I had to just create the brand, I had to create everything, and I was sort of preparing myself over that amount of time, and then just one day I just went in, and I'm like, okay, now's the next few weeks is the time, because I actually gave birth. My wife gave birth to my daughter, and so I'm like, you know what? I'm taking 2 weeks off the bank, just because I can think. I'm like, you know what? When I come back, I'm done. I'm gonna just make the transition. I called up John. I said, okay, I'm gonna join it in 2 weeks, and then I walked into the bank and I spoke to my boss at the time, who actually now works with me. She works as a manager in my team. But I spoke to time and I said, listen, these are my plans. If you want, I will give you a 2-week notice, because I know that I had a lot of the builders in Montreal that I was managing and everything. I said, I'm not competing against you. It's completely different, and I'm not going to another institution. I'm really starting my own thing. And they actually kept me on for 2 weeks to help them. Just, usually they'll just fire somebody immediately, or just tell you to go home. But I helped, the transition to create. I wanted to leave on good terms and be in the right, mindset with them and everything. And so it did end very, very well. They knew that it was sort of. They essentially had a feeling that there was a time when I was going to leave them. And then I basically walked in that one day and I said, I'm gone. And, then I had to start creating the relationships at the other banks. Because I had relationships at BMO. I didn't have relationships at Scotiabank, at TD Bank, at Desjardins. At all the different institutions here in Home Trust, Equitable. I had to rebuild those relationships. I did it all pretty quickly, but it was a very hectic time, but it was all worth it there.
Okay. I can imagine the BMO wants to keep you on side too, because hopefully you're going to send them still some deals, even though you no longer.
Well, BMO is actually one of the banks that doesn't work with mortgage brokers directly, so it's not like they do fund some of the virtual lenders in the back end, but they don't work with mortgage brokers directly. There's a couple institutions that don't do that there.
Okay.
But we still have good relationships with them. So we don't send the clients, but we still have good relationships.
Yeah. Yeah. Okay. Fair enough. So you go out on your own, you knock on a few doors with other banks and say, hey, I'm Teddy, I own Groupe Orbis, looking to create relationships for possibly sending clients to you for mortgages. I'd love to know at this point too, because this, correct me if I'm wrong, would be the time where you also could expand the scope of your clientele to potentially service people like me, because I would have not been able to go to BMO when I first looked for finance. As you taught me, there's this thing called A lenders and B lenders. A lenders being the main banks, B lenders being alternative finance sources, which I used for my first few loans. That must have been now available to you as well, which opens up new clientele.
Yeah.
Is that kind of what you had to do then? Make a lot of relationships and then open up your marketing to new people?
So first of all, for the lender relationships, I had the relationship with the John Barges and Symbic. So I was able to leverage their relationships across all of Canada to create the financial institutions and maintain those and just grow on it. So I was okay on that end. It was creating the network of new clients where it was great because we still had the clients coming in. I still had a team, and I brought some people from the team over. I still had the clients coming in. But now we were able to open up to more different types of situations where you sort of rebuild your business. And really, for the first 6 to 12 months, I was actually doing mortgages, and I was growing it. And I've limited that a lot more now. Like, it's just very limited to who I actually, it's more I manage the firm now. But back then, it was going out to realtors saying, if you use your person at XYZ bank and he gets refused, your client gets refused, send it to me, I'll find a solution. And I said, we essentially could approve anybody in Canada if they put 20% down. Now, the question is not if it's going to get approved, it's what is the rate, right? Is it at 1.5% or is that 15.5%? And so it's somewhere in between. So we do have the A banks, we have the alternative B banks, and we have the private lenders, and they're institutions. There's it's not just somebody who's a private lender going to break your legs or anything. It's institutions that are that are specialized in this. Rest of Canada is called Mix, and here in Quebec it's really it's just companies here, but and so having the scope of products available was key for me, because then you will never lose a client. A, they're not going to get a better rate than what you're offering, and B, you're never going to lose a client from an approval perspective. Before, it was pushing BMO to approve the deal. Hopefully they approve the deal. Let's position it. Now it's what's your situation? Well, these 2-3 banks are the best for your situation, and here are the rates, right? And it's a different process, and I have to actually retrain myself how to sell, because it wasn't the same mindset as, here's the rate, and push BMO to try to approve it, push them to try to get the best rate. No, it's like, no, I'm not going to push a bank. You give me your options, all the different institutions, and and reposition the client with the right institution based on their needs. So it's much more client friendly, where you're on the client side and not selling to a client. It's like the client comes here, it's like, we're together. this is the strategy. And like with you, for instance, this is the strategy, right? And I think we had discussed that. This is a strategy going forward. I think we're going to do this. After some time, it's going to go here, and it's going to go here, and so and I think it did work out. And that for me is situations like that where you have clients for life after is the key thing. And that's really how we've done that here.
Okay, so with Groupe Orbis, suddenly you're the man in charge now of your own brand, your own company. And like you said, one of the main goals was to train people. So you had a team of mortgage brokers. So no longer is Teddy doing 800 clients a year himself. It's maybe the entire firm is doing, 5,000 clients a year, but we've got 5 mortgage brokers or 10 mortgage brokers, et cetera. Can you take me back to the first person you hired as a mortgage broker, and how did you imbue them with the Teddy methodology? Like, how did you pass on?
It's a good question. So I started in April 2018, and really, I told myself for the first 12 months, I'm going to understand this business and learn it before getting people to join, because I want to actually give them value, not just sell to them. So I did have my team of assistants and whatever, but I think a month in, a friend of mine, I knew him personally because I'm at a mortgage broker at another firm. I'd like to join you. I said, Brandon, I can't right now. I don't even know what I'm doing right now. So give me a few months and I'll touch base with you and we'll go like that. So after about 2-3 months, I think he called me again and finally said, okay, now come on board. So for the first about 12 months, it was just people that I knew that were joining me. So it was actually easier because they were just sitting next to me. This is pre-COVID. So they're sitting next to me, I'm like client calls, I'm like, listen. And they would listen to the conversations, how I would talk to the client, how I would position it. And it was really like hands-on learning. It wasn't, there's any specific method to it at the time. Now it's much more, there's a whole process, but, and then,
I don't know why, Ted, but I'm thinking Wolf of Wall Street with you sitting there listening to your protege and then yelling at him.
No yelling. But yes, listen, I do try to create, the good thing about Wolf of Wall Street is like sort of the environment of people trying and working hard and everything. And so I do want to create a fun environment that people do work hard. And that's I do only hire people that want to achieve good volume. There's many different types of people. And I respect the people that say, you know what? I want to do this part-time, that's fine, but they don't fit my model, and we don't hire them here. So we want people that think similar to how we think here. And so then it was just, and then about 12 months after I started, I made a conscious effort of saying, you know what, I'm not going to do mortgages anymore. I'm going to perfect this type of thing. And I think that was a time, I think when you came on or so, but so the people who had existed relationships with, I would maintain those relationships, but anybody new, I'd just give to my team. And that was really how we started to scale this, because then I created a training program for new brokers. Then I hired managers. Then now we're 60, 70 people under Orbis, and we want to just double this in the next 12 months. But you need an infrastructure. You need knowledge. And then I think I acquired it over a certain amount of years, and then a specialty when I was in the broker business for about 12 months. And then I'm like, okay, I have the knowledge, I have the relationships, my mortgage brokers are making the most money in the business. Let's scale this. And that's really how we did that, and created, again, an infrastructure of people to, when you're on board, what's the process? When you want to, week 1, what do you learn? Week 3, what's the training like? And they create like an environment for success to help them achieve their goals there.
It must be a very different role for you, because you were kind of like the front-facing mortgage broker guy, and now you're the CEO of a team of 60 plus. You spent a lot of your time hiring and training, and probably far less time talking to clients. Have you enjoyed being a CEO rather than a broker?
Yeah, it's a completely different job, and on my end, that's what I always wanted to do. I believe that's the only way I can grow properly. And speaking to clients is great. I actually like having success stories and hearing how I help people out, and it's great. Like it's it's limited in my time that I can actually do that, and that I won't get my ultimate goal, to doing that long term. So, but I do love what I do, and I love seeing some of the brokers that come in and they're doing, let's say, 10 million of volume one year, and the next year they come in, they're doing 30 million of volume, and it just really, their life changed in the past 12 months because financially they've tripled their revenue, and they're making a lot, and it's like, okay, having those successes are also great, right? And but you do deal with different challenges that you never dealt with as an employee, right? You deal with every day, thinking about things that you never thought about when you're like, what, I have to think about that from an HR perspective, from a regulatory perspective, from everything, right? There's a lot of different things that you are now responsible for.
As you know, maybe the listeners don't realize, that maybe they do, Canada, especially the last, 4 or 5 years, has gone through an absolute boom in property prices and property volume trading. Obviously, that's been a boost to your company as well, with the number of mortgages constantly coming through you. I am curious, though, with Groupe Orbis now in particular, have you had to come up with a different or a more robust marketing side of your firm to bring in the clients? Because now you've got no longer just Teddy as an agent, you have, or a broker, you have whatever it is, 10, 20, 30, 40, 50 people all needing leads. That's a lot more lead flow. Maybe the answer is because the market was so booming, you had too many coming in, or did you have to build a more substantial marketing angle, or do they always go out there and work themselves? They're like little Teddies back in the day. They would do all their relationship building and bring in their own clients.
That's a good question. And we don't, there's not too many leads. We always want to have as many leads as we can. But from a company perspective, I had to shift the marketing to a brand marketing, and not just around myself. Like originally when I was BMO and this and that, it was about me, right? And so pictures of me and whatever. Then now it's consciously just a brand thing and creating that awareness, and it's nothing like, if you don't know, you wouldn't know that I own it, right? So it's not online like under me, but from a what I had to build from a marketing perspective, I do have good relationships with different realtors and office and owners over on the island and even provincially, where I did leverage those relationships, and I created corporate relationships for all my mortgage brokers, where they'll go into an office of a Via Capital, for instance, and which is an agency down here, and so we've made so my realtors have access to that office, right? And they there's a certain commission split based on that, and so I've opened a lot of doors for the realtors, for the mortgage brokers with realtors. And I have coached them to go out and get their own business as well, where they need to have a mix of their business, where they get leads from us, they get the referral sources from us, but also they get their own referral sources, because you never know which one's going to dry up one day. Okay, and just having to diversify where all your volume comes from is very important. And yeah.
Does that include like social media, pay-per-click advertising, search engine optimization, going on podcasts to talk about things? Is that sort of in the marketing mix as well?
We do have like a team, a company that manages our social media account that helps us, with the ads, with stuff like that. And we are doing that a little bit. We, especially in this business here in Canada, it's very expensive because the banks are spending all this money on Google ads. And, so it's like I'm not going to compete against BMO, and they're spent online there. So it's almost, how do you position yourself? You're not going to position yourself as a rate game, because there's corporate entities that have a lot more funds than I do in that space. So I position myself with the realtors, and that's where I think there is a lot of value with the referral, not just realtors, but referral sources as a whole. And yes, we do the branding online, we do some Facebook ads, we do some of that stuff, but the relationships with the owners of different offices and the firms is how we can create a more long lasting, because we're not constantly spending money to position ourselves on ranking first or whatever it is there, and so try to balance that end.
Okay. So it's almost back to Teddy day one when you first started as a broker within BMO. You were, Okay, interesting. I do want to switch to a few financing questions, but I do have one question about your brokerage and just the whole mortgage industry too in the future. and this is primarily because I've been maybe a little too deep in the future of like blockchain and AI and so on, in particular with DeFi, so decentralized finance. And I think about a business like yours, Teddy. So, you're, I don't know the numbers, but you're taking commissions. Your agents are taking commissions. The banks are taking commissions. It's like this pie that's getting sliced up along the way, and who knows, the bank might be going behind to another lending source, whatever the case may be. With DeFi, we remove all these middle people, and I'm foreseeing potentially a future. I don't know if you think about this or not. You might not have any answer for this, but a potential future one day, as a client, I go to a decentralized financial source. There's only one source. It's like a group of token providers, cryptocurrency. I just borrow from that. I don't borrow from a bank. I don't borrow from individuals. I just borrow from this decentralized organization, as do other people, and it kind of runs itself. Theoretically, that is where we're heading with DeFi. Do you keep on top of any of that? Are you interested in any of it? Do you see yourself adapting some technologies in the future, even within your brokerage?
I think yes. Listen, I think that in the past 10 years, it's completely changed. The funding sources have changed here in Canada. And I think that in Canada, it's a little bit different because it's so protected. There's not that many institutions. And really, there's one way to securitize it. It's a little convoluted. So I think it's a huge opportunity in the future. And that's why being a broker for myself is very important, because we give advice. We're not reliant on one certain source of financing. And I do think that there is a ton of opportunity out there for different sources of funding, whether it's through DeFi or through other lenders coming to Canada, or through different ways to make it more efficient. Because yes, there is a lot of waste of money through efficiencies here. And there's many different reasons why it's like that, from a regulatory perspective, where it's very tight-knit, it's controlled. That might be one of the hurdles for DeFi, is the regulatory environment here, especially in Quebec, is tough, right? And they want to make sure, and Canada as a whole, they want to protect the system and protect institutions there. And it really depends on what the cost of funds is from the DeFi perspective, and that's also important, because the banks have ways to actually have very cheap cost of funds out there, especially in this environment, and it's very hard to compete with that and with the amount of money that they currently have. And they will protect themselves, I'm sure, to make sure they protect their market share at all costs, everything. And it's almost like they could borrow very cheaply from the Bank of Canada, and it's hard to compete against that. And that's the biggest hurdle. However, we talked about the alternative space. We talk about the private space. These are spaces that I think there's not that many funding sources, and there could be a huge opportunity, especially with different sources, especially like DeFi or whatever it is. There's a whole market out there that's possible there.
Yeah, and of course, if inflation kicks in, suddenly that lending source isn't so cheap for the banks and so forth as well. So
you never know what's going to happen. But I do think that
yeah.
just the way they underwrite deals has changed tremendously in the past 15 years. And I think that the next 10, 15 years, it's going to be huge. And I believe we're well positioned as mortgage brokers, because we don't care whatever's best for the client, whether it's BMO, Desjardins, Scotia, or whether it's XYZ, DeFi company, whatever it is. That's better for you. Yarrow, we're going to go here, and that's your best bet here. So on our end, that's why I actually saw, not from the DeFi, but I saw that there was a huge change in the environment of financing, and that's really why I was looking for a change from BMO, because I don't want to be reliant on one lender. I want to have access to the full industry, and I don't want to tell somebody who just came from Australia saying, you know what, we can't get your mortgage here. Yeah, but I want to put a big down payment. Doesn't matter. We can't get your mortgage here. Call me back in 3 years. No, I want to tell somebody, I have a solution. Here's a strategy. This is how we're going to do this. And you know what? We'll do this together. We're going to get there. Just be patient. Within 18 to 24 months, you'll be at your goal, basically. And that's, I think, it's a long-term play for us.
Yeah, it makes sense. I could imagine. It's a little funny to think about this, but if DeFi was an option where there is no institution, it's just this digital body of where you can borrow money from, you would still be a consulting layer, because there's obviously going to be a trust issue, especially early on, where people won't feel comfortable. Well, some people will, the early adopters will, but the majority of the population will be like, I'm not borrowing from this mythical digital, doesn't have a branch or a brand name or a company or a country or a government backing it up. It's just computers. And you come in and you kind of take them through the process, show them how it works, and that could be where you have a fee on top of things.
You give value,
commission.
right? We're giving value.
Yeah.
We are protecting the client from whatever he's going to do, because obviously, if there's 1,000 different financing sources or ways to get financing, well, how do you clarify that, right? Although it's a decentralized sort of environment, it's like, what's the best thing for me, for my situation, for my goals? Okay, we're going to go like this source, but we're going to do it like this, and so I think that there, again, it's going to progress over the years. It won't be overnight. I think it takes time here, especially in Canada. But yes, there is going to be a very big wave of changes that I believe coming to this environment, and that's why there was a report recently from BMO actually for the mortgage broker market for Canada, where they talked about the current market share, and they believe it's going to mimic Australia. Actually, our banking system follows Australia after, and I think Australia has about 10% more market share in the mortgage broker space than here. So I think that they believe the mortgage broker space, where it's sort of advice driven, is going to grow versus the people walking into the branch, and I think it's going to grow even more over the years and everything. So,
yeah, you got to get your SEO up, get all that content out there, Teddy. I have a friend back in Australia. He was on the podcast as well. He's the founder of a company called Finder, and they're basically like an online education resource for comparing every type of loan, whether it's credit cards or banks or even cryptocurrency options. So, and they do so well because of every single Google search for which credit card is better, which bank loan is better, shows up his company Finder. But anyway, we've been talking about the future here. I'd like to kind of, maybe in the last few minutes, I know you've been here an hour, I really appreciate your time, Teddy, bring it back to today. So let's discard the future and DeFi and everything and look at where we're at now. Especially for, I guess I'm switching to the people you help here and all the questions they might have. I can ask a few. First of all, why do you think property, and I'm not just saying for Canada, but just as a general asset class, is the best or a good option, since obviously you put a lot of it sounds like most of your investment outside your own business has been in property. I don't know if you're in crypto, I don't know if you're in stocks or have other companies, but I'm assuming it's mostly property. Why do you still see property as a great choice for people?
Well, yes, I do have some stocks and stuff like that, but the majority is in real estate. Why? Because I think property has proven over the past X amount of years to be very safe. Especially here in Canada, it's been a safe investment. You can leverage it. It's easy to leverage versus stocks are a little more complicated to leverage. You can still leverage it, but not as much leverage as you can currently get here. And people can sort of reach for higher levels by doing that. I believe that people like to touch something and say that I own that, and not like I own 65 shares of XYZ bank or whatever it is. And so I think that people like to actually have a tangible asset that they're able to touch. And I believe that there's a comfort level, like people feel safe with real estate. I know that, in the States and whatever, there's a huge downturn in the late 2000s there. But again, it came back, it rebounded, and I feel it's I think it's a safe investment. Again, can't be over leveraged. You can't, bet the future on everything. But if you do it intelligently, and you're able to really understand the market, then you can make a lot of money here, especially with leverage. You can make a lot of money, and so that's really why I believe people are venturing to it, and more now, because so many people have to live somewhere as well, right? Like, you're not gonna, whatever happens as a company, as a business, people need to go home somewhere and sleep somewhere, and that's essentially the base of real estate. Is, people have to live somewhere. With the population always growing, there's going to be always more demand for real estate there.
Mm-hmm. Kind of part two of that question. So I have a kind of angry girlfriend right now because she's like in that millennial group who have watched their parents' properties all go 10x in the last whatever number of years, and now they're priced. They feel like they're priced out of the market, especially with a standard salary job. And the expectation is maybe this will happen, but I don't know if we're going to get another 10x run in property values to compare to what the boomer generation enjoyed. How do you suggest people who are right now looking at their first purchase, especially from the finance situation, because how much they can borrow, what their stress test is for how much they can handle in repayments, what's the potential for future growth? Have we maxed, has it's grown so much, how much more can it grow is always the classic question. How do you advise and talk to people like that? What do you suggest they do? Assuming they have like a 5% deposit, but this big chunk of their net worth.
First of all, I think you have to, whatever you buy, especially to live, has to be within your budget. So you make yourself a budget. You're saying, I can afford $2,000 a month, whatever it is. So then $2,000 a month equals X amount of mortgage. And then if you have 5%, it means X amount of value, property value. So you're like, okay, well, that's my comfort zone. That's where I can buy. And then you look for the areas that you can live in, right? And don't force yourself to live downtown Montreal because I want to be downtown Montreal, but my budget is another region of it. No, live within your means, right? So then once you have your price range, you have an option. You have a decision to make. Do I get a smaller place with a better location, or do I get a larger place on a location that's a little bit more limited, right? And that is, I can't decide that for anybody, and everybody has their own wants and their own needs. And so I always tell people, just buy within your means. Do not buy too high, and then just be realistic about what you can buy. Because don't first searching for properties for $1 million if your budget is $500,000, and although the bank is maybe going to approve you, and we can find a way. So it doesn't make any sense to do that, And so just really buy within your means, whatever is possible. And coming back to if you think it's going to be 10x. Listen, it's hard to predict the future, but I think it's going to be stable. I think that maybe it will slow for sure. It can't continue like the way it is right now, but it will slow down. But will it go to negative 10x? I don't think so. I'm not betting on that with my holdings, but I think that it's going to go slow, especially here in Quebec. It's going to go up, a slower pace. I think the rest of Canada will be very similar to that. There's still a lack of supply, and that's a huge problem down here. And so the demand is maintaining. It's probably going to grow even more with immigration, with all the COVID sort of hopefully ending soon and everything. So I am very bullish on the market, on the real estate market. I'm very bullish on where we're at. I think rates, although if they do go up, and hopefully don't go up too much there, but if they do go up, is manageable. We are qualifying people, like you said, the qualification rate. At much higher rates than what they're actually borrowing right now. So there is some play for an increase in rates. So I'm bullish on that. And I do think, as you said, it's an inflationary environment, and that's going to sort of help the values. And if it is an inflationary environment, you want to get in and own assets, because if you're holding cash when there's an inflationary environment, you're dead basically. So it's you won't grow your net worth at all there.
What's your thoughts about overseas property? Rather than buying where you are, buying where it's best on the planet for whatever your goals are.
I think there's great opportunities everywhere. I just don't. What I don't know, I don't invest in. Okay, and so I like to invest in what I'm comfortable with. And if you are comfortable in the market in, London, which is obviously a high-priced market, or Greece or Athens, or whatever, then go ahead. But I wouldn't invest into areas that I'm not comfortable with personally. I'd like to do all your research and understand the market, but yes, there will be opportunities. I'm sure everywhere there'll be opportunities, and I don't know enough about it to really make advice on that. And that's and even put my money there. I'd rather not do that.
Yeah, you've never done it.
I stick to what I know.
No property increase in the birth.
Not that I'm aware of, but no, it's just I really like to be conservative in that approach, and even within Montreal, there's certain areas that I will invest in. There's certain, although it might be a good opportunity, I'm not investing there because I don't know as much. I like to almost have an arbitrage situation where, I know it's undervalued, or I know that I'm buying at a certain price, which is expensive, but I know I can optimize the rents and optimize the building and create some value there. So if I'm doing that, I have to know the area, and that's really where I concentrate my efforts on.
Okay. Maybe last question or second last question, Teddy. There's people who seem to be able to buy a property every year, to a year. It's their main strategy. And they're not necessarily flipping either. They're buying, maybe renovating, refinancing, and they just keep going and going and going. But a lot of people, when they go to the broker, they realize they can borrow against one property, and then maybe they can refinance it and get their second one. But when they start hitting their third investment, they haven't been able to accrue any more capital for the down payments. It seems like they get stuck at that point, and commercial lending isn't really an option for them, either. How do these other people do it? Are they always just being creative with where they're sourcing a down payment? Is it always a case where they just have a lot of cash flow, like they have a really high-paying job, or they own a couple of businesses and that's returning cash, which they turn into the property market? Because you see the flip side of this. You see the clients and how they're able to accrue so many properties. So what's the most common formula for consistent accumulation?
I think it's buying well. Okay, first, number one is because you need a down payment, so you need to have the money for the down payment, whether it's through a refinance or what other way, but you need money for the down payment. But if you buy well and you optimize it, then you're able to refinance and you buy something else. And that's what I've seen. Yes, prices have gone up and the market's gone crazy, so everybody's able to refinance and get money out. But it's really, you make money in the buy. You make money in the vision, right? And if you're buying at the top of the market, let's say you're buying at, a new construction condo that has, whatever, basically you can't refinance in a year or two. You're stuck there for a certain amount of time. And then, you'll accumulate some wealth because it will go up a little bit, but you won't be able to scale like that. The people have really done well and have really scaled is they've used intelligent financing sources to their advantage by buying, renovating, or optimizing, and then refinancing and using the money for something like that, and doing that whole process again, but being also very, very, very careful where you position your money, and not just buying to buy. People who buy to buy will eventually get burnt, and it's going to burn out. And it's, again, when you're using leverage, if you make a mistake, it's going to cost you money as well. So you have to be careful. And so on my end, it's really the players who are doing this know the situation and understand the value. I have a friend in Ottawa. He buys a house. He says, well, there's X amount of square feet. I'm going to put a 20-unit building on that. And he knows the value, how much he's going to do, what the bank. He knows exactly every step of the way. Amazing job he's doing. But he has so much knowledge, it's almost unfair. So really, if you want to get into that, or whoever wants to get into that, just learn about the different areas, concentrate on a certain amount of areas, and try to look for the arbitrage opportunities. There's always an opportunity to just understand where it's at, and just be careful where you put your money in.
Sounds like leverage specialization, just getting familiar practice, doing a certain strategy, exactly, and learning from it. So last question, I think. We'll see. The future for Groupe Orbis and Teddy, you own a lot of property. You said you want to double the size of how many people you've got working with Groupe Orbis. I've always been curious, like a person like yourself, when your property is like this strategy, do you plan on just that's your legacy? You pass that on to the family, or is there a point where one day you sell it and then buy a big yacht? And then with the business, same story. Like at some point, I assume you would retire. Would you sell the business, or does it maintain ownership in the family? And it's you hope maybe some of your children take over, or you just take cash flow, and that's what your family onwards. Like, what's the plan?
It's hard to say what the future is going to be. I'm just focused on really the next year or two. Now, would I be on a big yacht and sell it? I like to work. I like to vacation. Don't get me wrong. And I like to go to Florida every so often. But I think that I'll get bored of that after some amount of time. And whether I sell it or whatever is going to happen, I'm open. Again, you have to always be open to all the different opportunities and open what's happening in the future. But I'm not going to just. This is not going to be like I build it up to sell. This is not what I want. It's really I'm building something that I truly think there's value, and I think that there's a future here. On the flip side, I don't necessarily want to just hand this over to my children or hand over. I think that they have to work for what they, what they get in life, and I think you want to help them out and support them with, educationally, support them maybe with starting in their start, but you want them to build their own legacy as well, and maybe at a certain time maybe able to donate some money to different causes and to grow within that type of scope as well. I do have some plans, but on my end, it's really just I'm focused on the growth, the immediate growth of Orbis, and I think that's a huge potential here in Canada and Quebec especially. The market's shifting, and we'll see how far we can go. I think that I've seen other stories that have been really, really good, and I'll try to model after some of them, and just seeing how to grow that and having the right people around you is the key for me there.
Okay, great. I do have one more question, Teddy. It's for the audience, really. If a person's been listening to this and they're like, I am really interested in becoming a mortgage broker. They're not necessarily in Montreal, of course. They could be anywhere on the planet. What type of person is well suited to become a mortgage broker? And bearing in mind they're obviously starting from scratch. So, what's the strategy today to get into the mortgage brokering?
So what I look for in somebody, it's really a go-getter, somebody who's not shy. Although, maybe when I first started I was shy, but it's learning to sort of get out of your comfort zone, and somebody's hungry. Somebody wants to achieve, and it's good with the numbers, analytical. So if you don't want to work, if you're lazy, which a lot of people are, which is fine, it's not really the job for you. There's a lot of, and you can't get too stressed out because it's a very high ticket sizes. So you can be going from making $10,000 1 hour, the bank refuses it, and you made zero. So like people who can't control their emotions, who are very stressed, this is not the job for you. But if somebody's even keel, and again, you learn as you go, but somebody's even keel, is very hungry, is focused, they will achieve. They will have success. And you have to enjoy the numbers. You just don't do this for the money. You have to actually enjoy the business, enjoy investing into something that is really interesting. And that's the key. If somebody just says, I want to make $100,000, it won't work, because you're just going to think about the money, and whatever deal I do, I don't think about the money. I think about what I have to do, and in the end, you'll make money. But it's really the person, and that's all I look for in people who are motivated. If you're not motivated, if you're not hungry, it's not going to work out. It doesn't matter how many people in the industry there.
Right. You have to be a people person, I would assume, right? Because you're going to spend a lot of time interacting with people. You can't be shy. You have to be a people person. Yeah. You have to be able to go in public and not necessarily beg for business, but ask for business, and just being you have to be smart, because the ones who have made good money, they have been focused, they've treated it as a business, and they're not just randomly working one day, the next day they take the day off. They're consistent in what they do, and it's really going out and just trying to do the same thing every day that you had success, and keep on pushing it, basically, and keep on doing the right actions, and have the right mindset, stay motivated. Nice. All right, Teddy, thank you so much. If someone wants to get in touch with you and any other websites you want to send people to, what are the contact points?
If you want to, you can email me at, the best way is info@groupeorbis.com. It goes straight to me. If you have any group with an E, it's the French way. And you're free to email me. And, if you have any questions, I'm open to anything. It's a pleasure, Yarrow. Thank you very much for having me. I think it was a great experience, and I'm sure we'll talk soon there.
Thanks, Teddy. And I'll put the Groupe Orbis website with the links to the show notes and everything as well. But thank you for the time.
Take care.